Welcome to Forex Focus Trading Lab. This is going to be our first video installation, and it's titled what you should be focusing on in price and knowing the type of trader you are. So this is a very important topic in price. This is what every neophyte trader is supposed to be told. You are not here to get rich quick. I want to put that in mind. You are not here to flex your power, flex your muscles, flex whatsoever you have. You are here to actually learn a skill. Reading price action it becomes a gift when you know how to do it. So as long as you are a student under Forex Focus Trading Lab, I want you to take away this mindset of you wanting to make money, or rather, you coming to meet me to learn how to read price action. It means you are here to make money. I want you to take that out of the equation for now, and I want you to focus on one thing for now, and that thing is this: I am here to understand how to read price action. I want you to say it to yourself. I want you to write it down. I am here to learn how to read price action. All what I'm going to be teaching is me basically teaching you the language of the market. Okay, now when you've understood all the concepts in this particular mentorship, you've watched the full 24 videos, and you'd see that you have a lot of ideas from each of the videos, but they are languages. See them as languages of the market. Okay, see them as languages of the market. Then for those of you who are just new to trading, like this is the first time you are ever trying to learn how to trade the financial market, I have a book that I'm going to drop somewhere for beginners. It's called Forex Beginners Part 1. The book will be somewhere. I'll drop the book right around anywhere, and I would send the link to you guys. You need to understand those languages. Okay, they are not much. There is just for you to build an understanding of the financial market. Okay. Now, what you're going to learn from this lesson is a PhD level of trading, in the sense that this is the highest form of you being able to read price action and to be precise. Okay, so one more thing I want to say is this: if you are new to trading and this is the first time you are coming into this industry, I want you to do me a favor and do yourself a favor. Do not let anyone know you're learning how to trade. Do not let anyone know that you are trying to become financially free. Don't do it. Trust me. Yes, you can let your friends in, like let them know that yeah, there's something like this going on, so come in, but know who you're talking to. Don't share this feeling with some particular set of people. Know who you are sharing it with. Okay, that's why I don't like when neophyte traders are flexing up because they are demo trading and other stuff. No, over here we don't show profit or loss. We read price action till we get into the strategy mentorship and risk management, money management, and trade management mentorship. Okay, you will get there. But I just want you for now, sit down, get a book and a pen, and then every statement I make, write them down. Take this formula for example, and this is the formula I used in studying price action, and it works for me. So when I was learning from my mentor Michael J. Huddleston, I do spend close to 2 days in watching a video. How I do it is this: each of those videos depends on the video. Sure, if the video is about 25 minutes, yeah, it will take me a day to watch. If the video is up to an hour, it takes me 2 days, so sometimes 3 days. So when you open this video at first and the lesson starts, do not look at your screen. but rather pay attention to what I'm saying. Right now, you have an earpiece plugged on your phone or your AirPod. That is what you should listen to. Do not look at the screen. Okay? So when the video starts playing, I want you to just start writing everything I say. But I want you to differentiate two things whenever I'm teaching. I want you to differentiate when I am ranting, just like what I'm doing currently, and what I've been doing for the past, I think, 5 minutes or 3 minutes though. Ranting, and two, when I'm showing examples. Okay? So outside those two scenarios, once you start watching the video, I want you to start writing everything I say. Then once you've done writing everything I've said in that particular video, you would watch the video again. But this time around, you're not going to write. You're going to look at the screen throughout. Once you're done with that, you now have the visual knowledge and also the handwritten material you have on your book. So you can read that and then watch the video again, and you realize that you've understood that language in that particular video. So that's the way I want each and every one of you to study this lesson till the end. It's going to be a 24 series, and it's going to be very, very interesting. Okay, so now let's move over to the next slide, which is the risk disclaimer. I want to let you guys know that trading the financial market is very, very risky when you do not know what you're doing, and I'm not a financial advisor who is telling you to invest your money. While you trade, or rather while you learn how to read price action under me, I would never advise you to fund a live account. It will be up to you when you've seen your progress. You understand? And when you have back tested data to support your strategy and all that stuff. But I would never advise you to fund a live account, or that will be up to you. And you can just read through the disclaimer. So let's go straight up to the chart, and let me let you guys know what you have to focus on as we progress. So when you get to your browser, any browser you wish. Personally, I use the Mozilla Firefox. I just like it for, I don't know, I just enjoy using it. So as you come to your browser, I want you to go on to type in this tradingview.com. This TradingView is a platform where we do our technical analysis with, we read price action, we know what's going on in price. This is where we take out all our in-depth analysis. Okay, now once you come to the page like this, I want you to create an account. As you can see up here, I have an account with them already. I want you to create an account with your Gmail, and make sure that that Gmail is secured, like you know that Gmail account very well. So this will enable you to have your TradingView being logged into your phone, your laptop, and your desktop if you have a desktop and a laptop at the same time. You understand me? So you have to keep them, because this is where you work. Like this is your working desk basically. So when you're here, you can type on any pair, any currency pair at all. This is what it's going to give you. What I want you to do is this particular button down here. I want you to click on that button. Okay, it's going to take you to a full chart. I'm going to take you to a full chart. Okay, so right now the chart is up, and it's time for us to get into the interface of the TradingView platform. Although you can go on YouTube and search for this particular interface, but I'm gonna give you the main things we need. All right, now first thing first is this: you want to calibrate your time from Lagos, Nigeria, or wherever you are, wherever you are living. I want you to calibrate your time. I want you to go down here to your bottom right, click on that time zone, and then change it to New York. Okay, once you change it to New York, automatically your trading view would be like that of those in the United States. Now, why are we changing our time frame? We're trying to change our time frame because of our trading techniques. Okay, we read price based on the New York Stock Exchange market and not Nigerian Stock Exchange market, and so therefore we are using their time frame to see how price moves. Soon you would understand what that statement represent. Okay, so now once you've done that, you are good to go. The tools on your left hand side is what you use in drawing. We do call it lipstick. All these are your lipstick you do apply to your chart. Okay, so first of all, you can come here and you can favorite your trend line, favorite your horizontal ray. Those are the two ones I majorly use. I don't use the vertical line, but I have shortcuts for it. Okay, so you use your Fibonacci retracement. We do use this for calculating price range. Okay, so fifth time zone, we do use this to calibrate time. Everything will be taught to you. Then this Gantt box is used for me to check the premium on discount. They are not the main things, in the sense that I can use my eyes just by looking at the chart. Okay, but I like to put these things on my chart so that I will have something to always work with. Okay, now over here I favorite my long position, my short position, because I use them all the time. Then I also favorite my day and time and price range, and I favorite my rectangle, my circle, and my curve. So those are my favorite angles, my favorite tools when I'm trading, and you can see them over here. This is it. These are all what I use for my trading. So I'm going to zoom in and make my chart a little bit bigger. That'll be Shift F to make your chart look big. Okay, now what you as a trader should be focusing in price is how price moves. You are not here to put on 3 million indicators or any indicator on your screen. You are going to learn how to read price in its naked form. Okay, so once you open your chart like this, what you ask yourself is this: what is price doing? Price moves in two ways only: from imbalance to liquidity, or from liquidity to an imbalance. Okay, now those liquidity are resting above and below the marketplace. Each highs and each low are liquidity in the marketplace. What you should focus on is how is price gravitating towards these highs and these lows. Whenever price leaves a new high and there's an old low, you have to check price. Where is price wanting to go? Is it going up to take out the buy side or down to take out the sell side? Now, whenever price is to take out a low, and it refuses to close below it, that is a sign in price. That means, what this means is this: when you go to the marketplace, do you buy to a buyer or you buy from a seller? Same thing happens to price. When price wants to go up to take out buy side, it have to take out the sell side before taking out the buy side. Now, there's a lot to say about what is going on in price right now, but what I want you to do is this: I want you to look at how price react to these highs, these highs, these highs, and then the overall highs over here. So now guys, I want to show you guys something now, what you should focus on. As you can see, we're focusing on how price was moving from these highs to these highs. Now, we're not only going to focus on that, we're going to also check how did the price reacted to the low when it got to that particular point. You can see in price, when price got to this particular low down here, price did not close below it. You see down there, price did not close below it. That is called a sweep on sell side. Now, when price does things like this, and then when we go down to our lower time frame, we start to see bullishness at the liquidity sweep. That is a bullish sign, letting us know that price will be going for what? Equal highs. So this is a form of equal highs. Now, these equal highs are retail mindset trading terminologies, in the sense that they are being taught that whenever they see equal highs like this up here, you see this right here, equal highs, they call this resistance. And whenever price trades back up there, they start to sell from there. But that is not how price is being booked. Price is an algorithm that would want to go up to take out buy side, to trade down lower to take out sell side, and then to trade back higher to take out buy side. But now you need to understand when it's going to run out liquidity or to rebalance and imbalance. Now, taking these alone as enough data for us to understand price action, I want us to look at something. When price was bullish briefly around here, all the lows were intact. This low was not taken out. This low was not taken out. Even when price tries to take it out, but it was kept intact. All right. Now, until price took out this particular low, price changed from being bullish to being bearish. The market structure lessons will be sent to you after this. Okay. Now, I want you guys to see how price gravitates towards old lows and old highs. Okay. Due to the fact that this particular price action was a ranging market, will have all of this rubbish in it. All of this right here is called the consolidation from this range low to this range high. But as a technician and someone who is wanting to read price action, when you come into the chart, you look for the old highs and old lows and check what is price going for. Is price going for liquidity or going to rebalance and imbalance? Okay, now liquidity are in forms of old highs and old lows. When we came to chart on this day, or rather this week, because this was a week worth of data, let's say for example we are bullish. Now, when we are bullish, we want to look for where are the sellers, because we want to buy from a seller. Do you understand? Now, when we came to the chart and realized that okay, this is the old high and this is the old low, price is in a range, which is very good. Now, you would only want to buy when price has taken out the sellers, in the sense that those selling are ready to sell to you. That is when you buy. You do not buy when price hasn't taken out the sellers. Vice versa, you do not sell when price has not taken out the buyers. Okay, now see, when price came down to take out this old low, sell liquidity, and then showed displacement in price. You see this heavy bullish candle? It showed the displacement in price. Now, after showing this displacement in price, this low right here was never touched. And that's the algorithm. It would not come back to this low because this low has been expected. This was the low where buyers took their positions. And because people bought from here, they would not want to take out this low yet. And again, due to the fact that price action on the daily time frame, you've understood that on the daily time frame it is bullish. And then you come down to your lower time frame, take for example the 1 hour, you wait for where is the liquidity, where is old highs and old lows. Now, I am bullish for the day. I have been able to identify the old highs and the old low. Now, I would only buy when price takes out the sell side liquidity. Once you have this mindset and that is your major focus in price, you are in the right path of being profitable. Now, let's watch what happened in price. We're bullish for this day. When price came down and took out this sell side liquidity, that alone is a trigger. Okay, that alone is a trigger. Let me know that okay, yes, price has taken down sellers. People are selling. Now it's time for me to buy. Because those less informed traders, when they saw price taking out this low, because of fear and greed, they tried to buy. But due to the fact that you understood your higher time frame, you have a bullish bias. And so therefore, you stick to your bullish bias and you wait for the sellers to be taken out. When price took out the sellers, price made a bullish market structure shift. Over here, you'll be taught all of these in the next lessons, okay? I just want you to see what we're going to focus on, okay? When price took out this high, that is a bullish sign for us. The moment you see that in price, let me zoom in. The moment price makes a bullish structure after an immediate bearish structure, that is a bullish sign. The bear program would work. Okay, now when price took out buy side liquidity for the first time, it took it out and it closed above it properly. That is a sign that the market has turned bullish, and so therefore your focus will go straight up to old highs. Old highs are these highs over here, these highs over here, and these highs over here. Now, when price gets to those old highs, you would want to see, did price close above these old highs or the price close below these old highs? Now, let's watch what happened. When price took out this sell side, price did not close below it. Price rejected, showing the bullishness in price. And then when price retraced lower, it came down to a reference point called the rejection block. This rejection block is a form of an imbalance in price. It's a form of an imbalance. So price has taken out liquidity, it came back for an imbalance. If you can look closely, guys, when price was dancing along that rejection block, price was unable to close below it. That alone is enough bullish sign for you. Now, see what happened. When price opened, all of this right here was manipulation in price due to news event. And these are things you are going to always see, and I'm going to teach you guys how to actually avoid things like this. Okay, so over here, this was a news event. Now, when the news when news event drops, it runs liquidity. The liquidity that was here was this equal lows, this low right here and this low right here. Can you see them clearly? Those two lows right there. See those two lows? When price, those two lows are called equal lows. These equal lows, when price got there, you see the way price refused to trade and close below it. And again, price got to a rejection block. See the way price closed above it? Now, when price started trading higher again, this right here is an imbalance. This comes in the form of a fair value gap called BC. BC means buy side imbalance, sell side inefficiency. What it means is that price has been distributed in a bullish manner, buy side imbalance, because of there's a gap over there, and it is sell side inefficient. So when sellers come down to that buy side inefficiency, buyers are able to go back in and take advantage of them. As you can see, when price closed below it, it went back in immediately. And you can see the way price was coming back to touch it, it was respecting it and never closed below it again. And then price kept on running old highs because of what? We were bullish on the higher time frame. When price took out the first high, see the way it closed above it nicely. Took out the other high nicely. Took out the other high nicely. As you can see, even when it traded below it, it came down to a reference point down here. This is a reference point called a bullish order block. When it came over to this bullish order block, it refused to trade below it, close below it. These reference points, the CB and the bullish order block, they are all reference points in the market. These are languages that let you know that this particular point in price would support the bullishness. Okay, when we saw price respecting this particular order block, this is the bullishness, letting us know that these old highs, over here will be taken out. And as you can see, price took it out. And so what am I saying? Your focus in price should always be, how is price gravitating towards these highs and these lows? How is it doing it? Why is it doing it? And when? That is the most important. When is it doing it? It's a matter of time. Okay, now I want to show you guys something quickly. This is on the 1 hour time frame. Right there is on the 11th of January. Right here is on the 12th of January. And right here is on the 15th of January. This was a new week. So on 10th of January. So I'm going to go into Friday. I don't know, any week at all. Let's go into Friday, the 12th of January, alongside that particular news event. Friday, 12th of January. I'll go lower to a 5 minutes time frame. So right here is the 5 minutes time frame showing the 12th of January 2024. Okay, now when you are in your 5 minutes time frame, you have to focus on specific time of day on your chart. The first one is called the London zone, from 2 o'clock to 5 o'clock. Okay, that is when you trade the London session. Then the second session is from 7 o'clock. All of this time are in the New York time. Okay, all of this time are New York. As long as you've changed your time zone, to New York, you have no problem. Okay, so the second one is the New York zone. It starts from, I'm going to clean this off. This was a news event. We're going to talk about this. So these particular places are where we focus on to trade. These are where we come into our charts to read price action. Okay, over here is the London session, and then the London close, which is the third session we look forward in price, is from 10 o'clock New York time to 12 o'clock New York time. That's our major focus. Okay, so these are the three time I'll call it a phase in price that will focus on only. Okay, now anything past 12 o'clock New York time is none of our business. Okay, we do not look at that. Okay, then they are going for the foreign exchange becomes quiet. Okay, by then the New York Stock Exchange major focus goes over to the S&P and the Nasdaq most of the time, with my experience and all that stuff and what I've noticed in price. So you can remember we had those equal lows on the 1 hour time frame. I'll take you back to the 1 hour time frame to check out those equal lows. Yeah, these equal lows go over here. This low right here and this low. So go down in the 5 minutes to see how price moved. I'm going over to the 5 minutes time frame. Those time stamps I gave to you guys, that's the 2 o'clock to 5 o'clock London session, and again 7 o'clock to 9 o'clock, and the last one being 10 o'clock to 12 o'clock. Now, when you check what happened during those time, that is when major lows were formed. Hello guys, it's for a reason. Check out the New York session. That is when major movement would occur. Check out the last session. Major lows would occur. Look at the low was formed. The first low of the day, of this day, 12 of January 2024, was formed in London around 3:35. And then the high of the day was formed in New York around when? 8 o'clock. And then because this particular day was just being bearish, we had the low, take out the London session low. This right here is a form of a liquidity. Came down here to take out the liquidity. Taking out CSR liquidity. At where? At London close. Where we should be focusing on price. Whenever price gets to from 9 to 10 o'clock, you're not supposed to look at the chart. Do not look at your charts. Go off. New York time, okay? Calibrate that to your Nigerian time. You would understand it very well. From 9 o'clock to 10 o'clock, take a break from your charts. Go somewhere else and eat. Enjoy yourself. That also applies to 5 o'clock to 7 o'clock. Okay, you don't look at your chart, but you only focus on your chart. And from 2 o'clock to 5, the first phase of the day. The second phase of the day is from 7 o'clock to 9 o'clock. Then the third phase of the day is from 10 o'clock to 12 o'clock. As you can see, guys, price took out this high, made a bullish market structure shift, came down to fill a what? An imbalance right here, and then started trading higher. Nothing in price is random. All of these things are what you're going to understand as you work with me through price in this particular mentorship. I hope I've been able to give you just a tip of the iceberg what you would be learning in this mentorship. It's not going to be a walk in the park, okay? It's going to be a tedious one. You're going to have boring lessons like this, but you need to understand what you're doing. The moment you are able to read price action just the way I've shown you, money will just be a side effect of how good you are. Okay, money would be a side effect of how good you are. People will chase you, people will look for you to trade for them because of this knowledge that you have. There's a popular saying in the industry that it takes 6 to 8 years for one to be licensed to take out surgery on patients. It takes 4 years to study a degree, a bachelor's degree in the university. But a lot of people come into trading and they're not ready to give their learning curve 6 months to a year. I've been trading for the past 5 years plus. The 6th year just started. And it took me 3 good years to understand all of this. I had a mentor, Michael J. Huddleston, and he was always sending videos, and I kept on watching, educating myself. And here I am today, I'm able to read the price action. That's the skill I have. Once you're able to calm down, take notes, read your notes, ask me questions, ask me the dumbest questions. You've paid for it. You've paid for it. You've paid for my service. Ask me questions. I'm always here for you. Okay? I can speak pidgin. I can speak English. I can't speak French. Okay? I can only speak English and pidgin. So ask me these questions. I will tell you. We will talk. This is a gentleman's business. It was so fun when I was interpreting price for you guys a few minutes ago. I didn't want it to stop, but I realized I had to stop because I don't want to make this video 1 hour to 2 hours. You're going to have boring videos like this, but I want you guys to be ready. Sit your ass down and know that this market is for gentlemen and ladies in this house. So your assignment for this lesson, I'm going to be giving you guys subsequent assignments as you go on. Your assignment is very simple. I want you to play around and share a screenshot of your trading view. Okay? Create an account. Once you're done creating your account, send a screenshot. Then change your time zone from Nigerian time to New York. And then you can favorite your tool and do also what you want to do. Okay? Now, for those using a PC, when you want to send a screenshot, hold your alternate button and then tap on S. It's going to copy. It's going to show you that a link has been copied. That particular link, just paste it on this group or on my DM or anywhere at all. The chat is going to come up and it's going to be very beautiful. Okay? If you can't do that, you can take a screenshot of your system and then send it to the group. Okay? But everyone should take part in these assignments. Okay? Your dedication matters a lot and the hard work you put in. Do not think, okay, trading is simple, buy or sell. No, it is too simple that it becomes complicated for we humans, and it becomes too simple. We do not understand ourselves. We think we are masters of it, but we are not actually. Okay, that's that. Thank you for listening, and take your lesson seriously. Follow the formula I've taught you guys in studying this, and to meet again. Be safe.